Good morning, everyone. How's everybody doing this morning, this afternoon? We got a truly inside night. Might be a small bit at yesterday's low. Yeah, let's see. We're gonna find out pretty soon, LC. For sure. So, welcome to Trading Syndicate, everyone. I'm JJ. If you're joining us for the first time, I'm vwaptrader1 on X, and our room is a Trading Syndicate, tradingsyndicate.org, where we try and help real people make real money. Real simple, you know. So let's go take a look at the futures here. Our overnight inventory is short pretty much. Most of the trading is underneath the previous day close. You know, we did a look above and fail of 76.31 and rotated all the way back down to the 75.76 level. Yesterday we caught a bid here, went back and forth, took that, sold it, put it on sale, and now we've stopped right at that 75.86 area. And that is just where the overnight position was before we moved up. So I have, these are the previous electronic sessions or Globex sessions. I put those in. I just wanted to show you that when we get close to 75, 71, the market has been bid now for 3 sessions. So if we break that bid, you can think of that inventory is going to spill out this way. The other argument is if we can't break that bid, this price action of going sideways will bring in buyers and will take out 76.31. So if you're a bigger trader and you're short, if you built a short position yesterday and in the overnight, we've got to lose that low. We've got to lose that 76.76 low. Otherwise, you're going to be hanging onto that short for a while until it breaks. Here, let me just get rid of the overnight sessions. You can see there's yesterday, the day before, the Friday before. We've been in distribution for a few sessions now. Let's see what the market brings when we open. We are going to open inside yesterday's range, and we're going to open inside yesterday's cost basis. That equals chop. Okay? So most probably the trading is going to be choppy and it's going to be back and forth. So that's something that you want to be aware of, right? When we're looking at these markets, we need to look and see, okay, how are we going to trade them, right? We have our setup and everything, but is there going to be follow through behind the trade? That kind of stuff is very important so we can manage our expectations. Right, we just corrected inventory. Okay, in this half-hour bar here, we just corrected inventory lower. And we took out the stop all the way down to 88, 86, found the bid, and straight back up. So I did a balance zone. Here's our balance zone, double 4 times, and then if we got into 8 times, we just did briefly. So that was a decent trade for those of you who were around 9 o'clock this morning. It was the look above and fail of 76.08, short down, but you had to hold it for a while. And you can see that it came in and it sells, and then it drops, and then it sells, and then it drops. So let's see if that pattern continues. Markets have been pretty choppy and hard to trade with brief moments of follow through. So, and then we just did a look below and fail of 75.90, back up to VWAP. But you can see that if you had taken the trade here, you'd have been out at VWAP, and if you took it again, and we're pushing higher, and we're coming right into this. The point of control was up here, so there is supply here, right? As we get to this area, that should be resistance. So we'll look at these upper stops and see exactly. If they start selling here, then we can short it back down. If not, we'll have flushed out everybody and we'll rail it back up. That's basically what we're looking at this morning. It's an inside day, and we are going to trade it as such. Right? So how do you trade an inside day? You trade the rotations, right? The look below and fail, the look above and fail. That's the best way to trade an inside day. Okay? Does anybody have any questions? Hey, but here, what's going on? No questions? You guys all good? An inside Attila means we are inside. So here's yesterday's high. Here's yesterday's low. We're inside the range of the previous day. So it's not a breakout one way or another, right? No problem. So what that means is an inside day means business as usual. So in a business, if the prices are the same as they were the previous day, we say it's business as usual. And if you paid those prices yesterday, you can expect to pay the same today. There's no change. So we're not looking for a breakout. Do I ever look at the options market, like what the expected move says? DTE, I do not. I never look at the options market. The reason why I never look at the options market is not because I have anything against it. The reason why I don't is because I have no idea how to take that interpretation, take that knowledge and interpret it and put it into a workable business strategy, right? So a lot of people will look at that info, but I have no way of looking at that info and saying, okay, this is where we're going to take the short or the long. This is where we're going to put the stop. And this is where we're going to put our stop. Right? If I'm trading the ES, I'm focused on the ES. Right? I'm focused specifically on the order flow in the market that I'm trading. So when I trade ES, I don't look at NQ. I don't look at anything else that's going to influence me. Okay. Milo, we have a ton of videos on setting up the balance zones. I talk about it pretty much nonstop. Balance zone is a cost basis. So let me get the market open. Let's open up the market, and then I'll do a little explanation of how a balance zone works. Okay? And there is there's a quick video here. So inventory did correct. We're clearing that 7602 seller. If we clear that, we're looking for 7608 on the upside. Okay? There will be sellers up here at 4 and change. And there they are. Okay, so we knew that there was going to be sellers there. If those sellers do see buyers, they will raise price to the next level where they sold at, and that'll be just under 8. So if we clear 5, you're looking for 8 and the close. Okay? So because inventory corrected before the open, right? Before the open, we had an inventory correction. That means price is moving back up. There's also, I'm going to also put in, there's a video here on inventory and cost basis, right? Because this is the most important concept of trading. If you are a trader, you have to know where things are priced so you can make good decisions. Okay? So you know that you're not buying at the wrong place and shorting at the wrong place. Because when traders are short, you know, a lot of people are shorting in the hole where they should be buying, and they're going long in an area where they should be selling. You know, because they're buying mispriced inventory or they're shorting mispriced. So did you say, remember I said there's going to be a seller just around 4? There's the seller. So if you're short the 3s and 4s, right, put some bids down here just around 7,600 and see if you can get a fill. Your stop is going to be just above that white line. If you lose that seller here, that means the sellers have seen buyers and they are going to increase price. Right? Because when sellers see buyers, they raise price. Right? When sellers are forced to compete, they will lower price, and that's when you want to short. Right? Shorting is simple. It's not easy. You need to find a seller and sell with them. When they stop selling, you need to cover. It's very, very simple. The execution of that is not easy. You need to practice it. And you practice it by going long and being a seller yourself. Because then you know what competition is. It's very hard to short a market if you don't understand seller competition. You will never understand seller competition if you've never sold anything. So I'm short 3.5. I'm covering the 2s just on a quick little scalp, just to see where the order flow is. Right, I got a couple more contracts to cover. I'm short 3 3/4, taking them back here, and I'm flat. Right, just a couple of points just to test the order flow. Right, I saw the seller. I anticipated. I knew the seller was going to be there. Right, very simple. Not an easy trade to take because it's not at an edge. There's been a seller there all morning. So you're shorting under 4th, your stop's over here, and you're covering into this liquidation. All right? The drop before the open was an inventory correction. Exactly. That's why we have less selling pressure on the way up on the open. Exactly, Jimmy. When inventory corrects before the open, you don't get that move down. If we had opened up here, like say at 76.08, 09, if we had opened up here, then corrected down, then you'd have more selling pressure. Very good. The simplest way to figure out a market is to go and mark the sellers, right? I said there's going to be a seller above 4, and there they are at 5 1/4. Just like clockwork. Why are they there again? Because they are size sellers that will sell at those levels before. Now they lowered their offer from here to here. When the next candle opens, let's see if it takes out the 3/4 and goes up, or whether it keeps offering lower. Watch. It's going to open in 2 seconds. A 1-minute candle chart is the best information you can get. Look. The seller has moved down. So if you were still short, that's good. That's what creates a trend line, right? All you trend traders, that's what creates your trend line. Your trend line is created by the offer moving lower. The offer is moving lower is because the sellers are competing against each other to capture the buying. So if you're a short seller, you're selling when those sellers are competing. So we found a seller, we're selling alongside that seller. When that seller stops selling and the offer starts to lift over the levels you've marked, get out of the trade. Does that make sense? Do you guys understand that concept? You're not shorting because it's overpriced or it's too high or any kind of a subjective reason you may have. The only reason that you are selling is because you've identified that sellers are putting whatever you're trading on sale. There's no point selling short when the market's in an uptrend because sellers are seeing buyers and they're raising price. You never short the front end of the move, which is this. Right? This is the front end of the move. You want to wait till the sellers step in and short the back end, then you got a place to put your stop. Because if you lose that seller, if they go away, it's like losing your backup in a barroom brawl, right? You're going to get into a bar fight and all your buddies are behind you. But if they disappear to go talk to a girl, you're hooped, right? Because you're going to be fighting 5 guys by yourself. Do you guys understand the analogy? Exactly. You sell alongside the sellers. Right? There's no reason to short a market until you've identified a seller. Right? It's just simple. Right? It's simple, it's easy to understand. That way, the more simple it is, the more easier to understand it is, the less you're going to be second guessing yourself and getting into trouble and, all that horrible stuff, right? You want to keep it nice and simple. Had I had more contracts, I would have stayed short. And I see that offer moving lower. Our target is VWAP at 75.96. Okay? As you are short, say you're short 76.02 or anywhere here, there's going to be some buying right before VWAP. So you want to make sure, boom, that you have your orders in and you cover. If we break VWAP and take out that candle at 94, right, we will come back into this little cost basis here. Markets are all about inventory and cost basis. There is nothing else, right? Now, that's why I don't look at ODT options or any of that stuff. Because if I look at all that stuff, you miss out on what's important, right? You see that there was a seller at 5.25. The seller moved down to 3.25. The seller moved down to 2. The sellers moved down to 1. Right? You get it? So the sellers are moving down. They're putting price on sale. And that's exactly why you want to be selling with them if you're a short seller. Right? When they stopped selling, they stopped at 96. Cover. It's simple. It's not easy, right? Nobody said that this was going to be easy, but it sure as hell is simple, right? It's very simple. Okay. If we break under 95.25, we're looking for 75.90. It's going to chop around here unless we get a sizable sell order, because a bunch of people are going to come and start covering at VWAP. You can see them doing so right now. You can see that offer lifting. You know there's going to be a seller at 99 because it's the top of this current candle, right? So for people who are joining us, right? For the people who are joining us, the sellers initiate at the top of the candle, right? Jimmy, if VWAP wasn't there, right, you would have maybe expected them at 98, and what you do is you put a buy order there. So say you were short 76.02, right? You put a 98 buy, a 98.25 buy. If that bid gets hit and goes lower, then you know that the buyers there have seen price being put on sale and they're dropping their bids. Their bids are buy orders, right? So the buyers, when the buyers see, what do you do when you you do the auction thing with your uncle, right? So say somebody's got a 76 Camaro, right? But there's no bids. They have to lower the price, right? So the buyers will all bid lower, right? Same thing. Get it? But it's not written in stone that that 98 buyer is going to be there. Yeah. There's it's not written in stone that that 98 buyer has to be there, right? That's why it's called price discovery. Now let's see what's next. A little back and forth. Right, so for when you join our room, as Steve's saying in the chat, we have an AI trading companion. It's 24/7. So when I am not in the room, it's been trained on what I teach. So when I'm not in the room and I'm not there, like, because I'm in the UK, you know, maybe it's 2 o'clock in the morning in the UK, but it's 11 at night or so in New York, and you want to ask a question, right? It'll answer the question just like I'm in the room. So we're the only room that has that for your resources. For the price we charge, sorry, do a little ad here. For the price we charge for the room, we're going to give you the most resources out of any room that's going to help you actually be successful. Because we're not going to give you BS answers and tell you, oh, it's an art, not a science, and we can't tell you where to take the trade. We're going to tell you exactly where to take the trade and why. There has to be a legitimate business reason for taking the trade and where you get out of the trade, the stop. Right? So if you were long, say, at 99, 98, you'd put your stop under 97 because the offer is moving higher and you'd be targeting 2 as a target. Because as you can see right now, they're selling the 2s. Now, if those sellers see buyers, they will lift their offer and your next sell order would be at 3 or 2.5. So you always have a legitimate business reason for taking a trade. There's no FOMO, there's none of that stuff, right? You're trading because there's a reason to take the trade. If your trade is mispriced, if your long is mispriced, you're out of the trade before it can hurt you, right? Those are legitimate business expenses, right? In business, there are expenses, right? Your stops are a business expense. Yeah, there's nothing wrong with thinking that there's going to be a bid there, Jimmy. Just don't get too fixated on it. You know what I mean? Right? You've got VWAP there, so you don't have to really fixate on it, right? Like, I know your question if VWAP wasn't there, but it is. So concentrate on what is there, right? VWAP is fairly flat. So you can take the look below and fail of VWAP. You could be buying 97, 98, stop under VWAP, right? Focus on what's there. It'll keep your mind more sharp, right? Does that make sense? There's nothing wrong with checking things out, but for right now, try and keep your mind focused on what is there. It'll just trying to make life a little easier for you, right? I know what you're doing. I've done the same thing. Just trying to keep you from going down rabbit holes, right? Now, if we take out the high of this candle, we call our candles, we give them a half hour, we give them a name. Like this is the A candle. So A is from 9:30 to 10, right? It's a half hour candle. If we take out that high, we're going to gun for that 76.06 stop. The next stop will be 8 and then the close. So those are targets. But you know that there is a seller up here at 5.25. So had you been long, you know that you should be selling the 4s, right? Because you don't want to wait till 5 and have somebody steal your customer, right? Because there's been a seller there hours before. See? And they sold there again. This is the simplest way to trade. We don't want to confuse you with a bunch of stuff. We want to keep it simple. Jimmy, do you understand what I'm saying? Does that like resonate with you? The more simple a plan is, the better chance you have of executing it. And when things go wrong, and trust me, things always go wrong in this business. If you have a simple trading plan, you'll be able to adapt and change and not lose as much money. And after a while, you'll actually start making money. Now, if you have a plan that's complex, when I started trading, you'd see these trading mentors and they'd go, okay, what's your trade plan for today? And people would write out a 3 or 4 page trade plan. And they'd never make any money. I'm like, how the hell are you going to make money with a 3 or 4 page trade plan? How are you going to remember all of that when you're getting punched in the face, right? I wanted you to leave VWAP earlier because I just wanted you to look at the look below and fail, Jimmy. I was trying to get you to focus on the edges. But you've been away for a while and you're just back now, so we'll do a session today because you're in my mentoring. You've been away for a while, so we'll get you up to speed. Okay? We still want to take trades for you at the edges. Sometimes this market does not go to an edge, so that's why I was talking about VWAP. Okay? And after you get a bit more experience, you'll be able to take those trades as well. Cool. All right? Yeah, and that's the cool thing about our AI. If there's something that you don't understand, we include the AI in the room so you can go to the AI and go, hey, I don't understand this. Can you explain it? Right? Now, here's that choppiness that I was talking about that we're going to experience right now. Right? The overnight point of control is at 75.97. So right here, what we're doing is we're distributing this volume up here. Right? That's why it's a little choppy and slow right now. Okay? We're taking this and we're selling it here. You can see the little purple square. That is where 70% of the inventory is mispriced. Oh, sorry, where the inventory is priced, not mispriced. Sorry. So what do we do now? Now you chill out. There's no edge. If you wanted to short again, right, if you were shorting this and you're short this 3-4 level, once again, your stop is right there. Because you do have sellers there, right? But they stop selling here. So it's a bit choppy. The second short might be a choppier short. And if it starts taking out the 4.5s, that's your warning level, right? So say you're short 3.5, 3. If it takes out 76.04 quarter and prints the halves, then you know that, oh, hey, maybe there's some buyers coming in that could raise price, right? That's how you got to think when you're a trader, right? Watch. So that seller, the sellers are here now, right? So if it takes out that level, it means that the sellers have seen buyers. And when the sellers see buyers, they automatically raise price. It's all done electronically, efficiently. Right? So you say you're short 3.5, right? Now, what you want to do is you want to go and put some buy orders underneath the 2s. Right? So if you're short 4 contracts at 3.5, go put a 2 and a 1 buy order there. The 2 got filled. If the 1 didn't, then you know, hey, you know what? I might have to take back the short. Right? Does this resonate with you guys? Do you understand what I'm talking about? Right? As long as that seller is there, you can short to your heart's content. As soon as you start losing that seller, there you go, right? You should be buying back contracts. And the faster you admit you're wrong, the less money you're going to lose, right? See, there's that 5.25 seller again. If 5.25 holds, we'll move up, right? But that 5.25 seller is still there. That's your ultimate out if you were short, right? See, now watch the next candle and see if it can lift over that 5.25. If it can't, we're going to go right back down. Okay? Go right back down. See? Do you see the sellers competing? It's choppy as hell here. This is almost a little balance in itself, right, folks? They stop selling here, they initiate here. So watch and see if they start moving up over 3.5. If we lose the twos and you're short, that's cool. We're going to drop in and we'll probably drop back down into the 75.99 area, right? Chop hurts your eyes? Good. Stare longer. Stare longer. You need to adapt to this market, Jimmy. It's going to be a pain in the ass. It's going to hurt your eyes. You're going to get angry. You're going to get frustrated. You got to suck it up, right? Say you're short and you get filled at the 2 bid and the other sits at 1. How long do you decide the one's not getting filled before you get out? It depends on the size of your account, Italian trader, and how much money that you're willing to risk on that business transaction. Me, if I'm short at 3 or 4 and my 2 gets filled and my 1 doesn't, I just take it back at 2.25. I'll just go grab the offer. That's why they have the buy ask button on the DOM, right? In choppy markets, I like to take profits, right? This is not what we call a greedy bastard market. A greedy bastard market is a market that you can buy a position and hold on to for hours, right? So you have to have an understanding of the type of market you're in, right? So in a choppy market, I like to get in and out quickly because sometimes these candles can be 5, 10, 15 points in the length of the candle, right? So as soon as I'm short, my buy orders are in. It's been a long time since we've seen what I called greedy bastard day. You know, in 2016, 2017, we used to have greedy bastard days. After COVID, not so much. Not so much. These markets are thin. The ranges are huge, right? So you need to take profits. The thing is, a lot of people poo-poo a 2 or 3 point trade. You know, yesterday I made $1,500 on a 3 point trade, right? You just put on a little size, right? So now if you think of this as a look up below and fail of 2, right? You see the bid went all the way down here. We should rotate back up to that 4 area again, right? Hard to trade. It's going to drive you crazy, but embrace that and watch that offer, right? Watch that offer. Okay, we got a seller at 3, right? There's a seller right there. Boom, they showed themselves again. Well, they stopped selling at 1.5. Look how choppy it is. Back and forth and back and forth. You don't have to trade it. You can sit and watch. And you will learn so much by watching. Right? You see that offer move up. In a market like this, Italian trader, take your money, man. Take your money, right? If you're long 2, sell the 3.5s, right? Put them out. Make sure that your orders are in the machine. If your orders are in the machine, you will be in the line. Remember, CME is a FIFO order execution engine, right? First in, first out. FIFO stands for first in, first out, first out. Not fit in or F off, right? FIFO stands for first in, first out. So you got to get in line. If you're not in line, you're doing yourself a disservice. If you're trailing your stop, if you're hoping it goes to 11, then a level, and you're going to put your sell order out at that level, you're doing yourself a grave disservice. Get your orders in the system, right? right? It's a very different execution engine than the old equity style. You know, in equity trading, size takes preference, right? So if you got big orders in there, they'll take preference over the little ones, and they'll trade around you and stuff. But in futures, like look at that seller. You can see that. Look at there's a seller at 4. See, look at that. Just extend the line. So if you're buying 2, you know you got to sell that 4. You gotta sell it, right? You don't want to get caught with your pants down in this market. Take the money. Take the money. Don't try and get greedy in a choppy market. I hope that makes sense. Getting greedy in a choppy market is the worst business decision you can make, right? Over trading in a choppy market is the worst thing you can do, right? Not having a clear business reason for taking the trade, another bad thing, right? Let's see if we can get back over 2, right? Wait for the next candle. Can we get back over 2? Right? And that's what you should be thinking. You shouldn't be thinking this is a good short, this is a good long. Where are the sellers? Where do they stop selling? Right? Where are the sellers? The sellers are active at 4.25. Where do they stop selling? Around 1.5, 1 3/4. So there you've got your chop zone, right? So say you're long 2, sell 1 at 3, sell 1 at 3.5, sell 1 at 3 3/4. Sell, Mortimer, sell. Get out, right? Do not wait for an invitation. Have your orders in and get out of the trade. The longer you wait for a written invitation to sell, the worse off it's going to be for you, right? Do sellers ever try and sell? No, Jimmy, they're competing with other sellers, okay? It's I think you're carrying a lot of small cap penny stock trading mentality into this. So don't focus on that, Jimmy. Focus on the offer, right? Remember the one-on-ones that we used to have before you were away, right? You're kind of off in the weeds a little bit, brother. Come back. Come back to the playground. You've gone off the reservation a little bit here. Bring yourself back and everything we spoke about, right? Inventory, cost basis, watching the offer. Get all those thoughts out of your head because they're clouding your judgment and they're frustrating you, right? Sellers compete with one another to capture the buyer. They're not screwing each other over, they're just trying to sell their product. They're not trying to push price lower, Honey Badger. Okay, Honey Badger, let's all close our eyes and pretend you're a seller, okay? This is one of the hardest things for retail traders to visualize because they've never sold more than 1 or 2 contracts. They've never sold more than a couple of hundred shares of stock. Okay? So Honey Badger, you're selling ES contracts, okay? But your contract is exactly the same as Jimmy's and Italians and LC's and TBD and mine. It's nothing special. You're not selling a gold-plated ES contract, right? So if your contract is the same as everyone else's, and everybody else is undercutting your price because the buyers are running away. Say you're trying to sell something at $5, but nobody wants to pay 5, right? you're not pushing it lower. You're just trying to get rid of your shit. Does that make sense? So at an edge, you do watch the offer, right? But you don't keep price from dropping. You don't care where price is. All you care is that you're selling what you have. Because you've taken 40 grand and you've bought this inventory, right? Say you've bought $40,000 worth of bananas. You got to sell that shit before it goes bad. And if Jimmy undercuts your price and steals all your customers, then you're holding a truckload of rotten bananas that are worthless. Make sense? And that's why they call it a market. That's why they call it a market. But we lose sight of that when we're retail traders because you guys don't trade size. So you don't understand what competition is. Okay? So the sellers aren't trying to screw people. They're not trying to hold price down. They're not trying to hold price up. They're just trying to get rid of their inventory. You know, I bought 1,000 TVs from China, and there's 20 other stores that are selling TVs. If people stop buying TVs, we're all going to have to start lowering our price and getting out of it. Right? This is a sales chart. It's telling you how sales are going minute by minute. That's all it is. Right? So sales were here, we put it on sale, brought in buyers. Put it on sale, brought in buyers. Right? This candle here brought in buyers. This is like a little Black Friday. When we lower price, does that bring in buyers or do they all run away? Right? That's what we're looking at. That's the practical aspect of trading. Just think about simple shit. Don't overcomplicate it. Now with all the information that they have now, right? They have overcomplicated this stuff so much that people are looking at options order flow and Velcro walls and all sorts of crazy shit that they don't need to be worrying about. All you need to do is worry about where your inventory is priced compared to everybody else's. Don't overthink it, right? I'm long at $5. I want to sell it at $5.75. But what? There's people selling at 74, so I'll sell it at 70 and get out. You need to think like you're sitting at a fruit stand selling apples or oranges, right? If I was teaching you guys one-on-one, I'd make all you guys go and work at a street stall and hustle, right? Hustle. You need to hustle to get the client, right? They fill your mind with all this useless shit that all it does is confuse you, right? Before 1995 and screen-based trading, people traded with common sense. Yeah. Of course, you think it's too simple. But Jimmy, you're young, man. Before 1995, you were born after 95. So before 1995, people just looked at a level and watched the offer, and that was it. There were no charts. You had 15-minute delayed tickers. So if I just gave you this, would you be able to trade? Would you be able to trade just looking at that? Probably not. But I could. Any old trader can just trade off the time and sales. You don't need a chart. I don't recommend that you try and do that now because you guys don't have the concentration skills, right? There's no way you guys would get eaten alive if you try and trade the time and sales because you don't know what it means. We have disconnected people from the basics of market mechanics that when I talk about market mechanics, people are just completely befuddled because they're looking to trade a moving average, they're looking to trade an indicator, they're looking to trade a pattern. Tomorrow at 11 o'clock, we're going to do a webinar in the room where we break down chart patterns. Did you guys go and look at how I broke down the head and shoulders pattern and explained the mechanics of it and how you traded? Have you guys gone and looked at that? Asking for a friend, as they say, right? That is what you need to focus on. Focus on the mechanics that create the pattern. Don't worry about the pattern. The pattern is meaningless. It's the mechanics that create it. The mechanics create it because of agenda. So that sideways action that we just experienced here, that we all saw, this sideways action brought in buyers. So they're raising price, so your target is 8 3/4. Now let's see what happens when we go and tickle the close. Right? Very, very difficult to trade this kind of price action, right? Right? I'll admit that freely, right? The head and shoulders is in the room, Tim. It's in a very, very, it's in a place that nobody goes and looks. There's a place called JJ Training Videos. Let me just give you the link, right? Copy message link. There's a lot of rooms in this Discord thing, right? So we're close to 8 3/4. Close. We came up to what, 8? There's your target. Now, that's 4 times cost basis. We're getting into 8 times. So what you do is you just draw 8 boxes on top of each other. Right? So cost basis is how much you pay for your shit. 4 times cost basis is you're selling your stuff for 4 times what you paid for it. Really simple. Oh, Mike, what's going on? Jimmy, just focus on this. Don't look at this so much now. Okay? I'm going to pull your attention to what's important. Don't look at this. Watch this. Okay? For there to be a look above and fail, it has to look above 8 and fail. Okay? Right? So if we get underneath 8 3/4, underneath 8, 7, you'd put a short on and your stop would be here. Simple. Don't worry about the close. Because that's 2 data points, right? Just focus on this level right here. Got it? Right? Focus on that. There is no reason to be shorting this here because it's not failing, right? Look, I've gotten rid of the TPO chart. We've got a 1-minute chart, nothing else, right? So just focus on this. Do not look at the TPO right now. Don't worry about it. Okay? Has it looked above 8 3/4 and failed? No. Right? The position is underneath us. There was a seller here all morning, Jimmy. All morning there was a seller here, right? Now that's a position. We're going to take that position and we're going to go and we're going to ram it higher and try and get as much as we can for it, okay? So don't worry about the TPO chart right now, okay? There's an overnight high there. They'll sell into that a little bit. And we'll backfill, and when we backfill, look to see if we hold 8 3/4. Okay? And right now, you should not even be thinking about shorting. You should only be thinking about going long because you don't know how to short yet. Oh, there'll be some supply from that 2030 area. Sure, there'll be some residual supply up there. That's for sure, right? Does it affect the price today? We're not going to know until we get up there. It's okay, Jimmy. You've been away for a while. That's why I keep harping on this with you, right? It's very easy to lose focus because you're away from trading. I taught you how to focus and then you go away, because life gets in the way. When you come back to it, that's why I have that 5-step method. That's why we have a trade setup, why we have that methodology. So when you go away from trading, you have a holiday or whatever, you come back and you throw yourself into that methodology so you're not always hunting and searching for different things. Get it? So we failed to take out that 8 3/4. If you're a fast trader and you bought some of the nines, there's going to be a seller at 11. So go put some out and see if you can sell some. Make sure that if you are long, if you're going long, put your sell orders out and get liquid. Yeah, we stopped short, Renee. We stopped short, and the sellers stepped in. But we came back down. We put it on sale, right? Little blue light special, Kmart, right? That's what that is, right? That we just did. It brought in buyers, but those sellers are still strong at 11. So let's see if we hold that 8 3/4, right? So remember yesterday in our one-on-one, we were talking about the look below and fail of the top of the zone, right? You can see they're front running 8 3/4 now, right? You can see that the bid is there. A little bit more technically difficult to trade this, right? But you know that there's a seller at 11 and they stop selling at 9. Kind of seemed familiar, right? It's the same thing that was going on here. Remember this? This is going on here now, right? And remember yesterday how we said it's almost like they changed up the algos a little bit, right? And that's exactly it right there, right? When it breaks above balance, we want it to, when we look for a long, what I like to do on a long is I like for it to sell, the sell orders to be complete, and then for it to come back and regain that level, right? When I was telling the young guy to only focus on going long, it's because going long is the best way to learn how to short. Now, I know that sounds crazy, but the best short sellers I've ever met in my life are distributors. You know why? Because they can spot selling competition instantly. Right? So if me and Renee and Jimmy and Elsie and Raj were all sitting at a level and I see Renee creeping down her offer, or if we're all sitting at 8 3/4 and she goes 8.5, we're like, aha, then I'll undercut her right away. Because I know she's trying to steal my client. She's trying to steal the customer, right? Which is smart, right? What's up, Rags? The bid will reign forever? That sounds very political. Long live the bid. I feel like I'm in the Hudsucker proxy. See how it's coming up over that 8 3/4? You buy a little at 9, you sell some at 10, right? You know they're going to be selling the crap out of this thing. As soon as you get up here, they're going to sell it. So if you're long here, get paid, right? Get paid, get paid, get paid. You have to get paid. These markets are choppy as hell. If we can hold this level, we'll take a run at that overnight high. We are at all-time highs. It's very hard. Oh, do you ever hear traders say you don't go from a bull market to a bear market? Well, in an uptrend, you don't just automatically switch to a downtrend, right? You should go sideways for a while, right? You should go up and then sideways and then down. We're still doing this. We're still in the front end of this crazy, crazy move, right? We're still in the front end of this move, right? So if you're long 9, 10, do yourself a favor, my friends. Sell into this overnight high. Make your money. I bought a little at 9.5 and 10, and I am selling them like I stole them. Okay? I've got one left. I'm flat. Right? Sell them like you stole them. Right? Because everybody else is selling, why don't you? Right? So if you were long 9, see when it did the look below and fail of 8 3/4, I bought 9.5 and 10. But as soon as I was long, I threw my sell orders out. Because I know there's going to be a seller at that overnight high, right? They're there. Like Danny DeVito says in Other People's Money, they're there. They're waiting in the bushes to pop out. And they did, right? It's not a huge trade, but on 3 or 4 contracts, right? Even if you make 2 points on 4 contracts, you're paying the bills, right? Now it gets into that choppy mess again, right? But you can see the same thing is happening, right? So if you guys are conspiracy theories, you can see that they've set the algos. The algos are set to annoy. Because this kind of price action annoys the crap out of retail traders. Right? I can feel you guys out there going, like when Fred Flintstone gets hit on the head with a rock, and he's like, I can hear you guys. Because it's not clear, there's no follow through. It's choppy as hell. It chops and moves, and then chops and then moves, and then chops and then moves. That is a different kind of order flow mechanic than what you're used to. And if you let it, it'll drive you freaking nuts. Don't let it drive you nuts, right? As Clint Eastwood says in Heartbreak Ridge, adapt, overcome, right? Algos work according to the order flow. When I say they are set to annoy, I'm joking, right? But the order flow we get is choppy, so the order flow execution is going to be choppy, right? And the speed of the distribution is definitely, if it's a series of huge orders, we'll trade differently than one big order and then chop, and then another big order and then chop, right? Right? And of course, everybody's looking for the big short, right? Somehow I trade better since I said I am doing 80 to 100. I have no idea, Aaron, but I'm glad that you are doing better, right? I mean, a lot of people think, because we live in this frickin' Lamborghini, I'm dating a supermodel society that everybody thinks they need to make 50 grand a day to be successful. But making 80 to $120 a day, right? That's making a couple of grand a month that you didn't have before. And you're not killing yourself to do it. And it's something to build on. What you're doing is you're developing good business habits and you're developing consistency. And that is huge, right? Nothing to sniff at. I think that's a beautiful thing. What happens next now in this crazy thing? Time to go to work, Jimmy? No problem. Send me a message. When you can, I'll be around later. Exactly. Exactly. Just get consistent, stay consistent, and just work on that. Yeah, and that's decent money, man. That's decent money. $200 a day is 4 grand a month. $300 a day is 6 grand a month, right? And that is better than 99% of most retail traders, right? Everybody wants to capture the big move, right? It's like my buddy who he had this short sale during the week, and he was short and he didn't cover on Friday, and he was up big. He made like 50 grand, 50 grand, 60 grand. He was up quite a bit. So Friday after the close, he went and bought a Mercedes. Right? Yeah, he bought a Mercedes and we partied all weekend. Monday morning before the market opened, they gapped the stock up. Compliance bought him in. He lost that 50 grand so fast it made your head spin because he didn't close the trade. And I had to give him a ride back from the dealership when he went to return the car. But we had a great weekend, right? Slow, consistent earnings as a retail trader. That's what's going to do it. Okay? Exactly, William. Exactly. What you're doing is you're building a foundation. It's a good thing that the cat who sold him the car was a friend of ours and used to sell all the traders' cars. I mean, he did lose some money on it for driving it the weekend, but the good old days. Okay. We've run out of buyers now, and we're going to come back to this little chop zone here. And if we break that 7,600 again, look for VWAP. It's choppy back and forth. Don't overtrade, right? The order flow will get better. The order flow will get better. You got on this candle here. You got wicked out ATL. That's the cost of doing business, my friend. Every once in a while, they get you. There's nothing you can do about it. That's what happens in thin markets. Well, folks, that's it for me today. Remember, do not overtrade on days like this. Wait for your edge. If it's unclear, don't take the trade. Don't trade in the middle of nowhere without a good reason. Okay? When the candles start getting really, really small like this, take a break. Okay? Right? Wait for better price action. Wait for bigger candles. Wait for a little bit more juice. Just relax. Don't force trades. Right? It'll come. Don't worry. You'll make money. You're right. But you need to be in the right frame of mind to make money. Build and design. Use your discipline to design your system, and your system will take over. When you are confused, if you have a system, if you have that human algo that you've built yourself inside your head, it'll go much better, right? It'll go way, way better. Okay? Thanks for being with us. We will see you tomorrow morning at 7:30 in the morning UK time, 2:30 in the morning New York time, okay, for our next session. And remember, Wednesday, 11 o'clock a.m., we're going to have a special session. Candle patterns, details, all the things that we miss that we should be paying attention to, okay? We're always trying to make us better. We're always trying to improve, right? Trading is a marathon, right? Thanks for being with me, and we will see you tomorrow. Have a great, great trading day, everyone. Bye for now.